All right, Lauren, come on in on this. You're watching yields every day of the week with Stu Varney. You're talking about these issues. Stephen Miran, look, the risks are jobs here. That's why we need to cut. Jay Powell, a little bit more moderate about that. What do you make of the situation we're in? What do you make of Stephen Miran's influence on this whole Fed
That's a very good
thing?
question. Does he have influence on the Fed? And he doesn't have much time. Technically, he's up at the end of January,
Yes.
right, to assert and exert whatever influence he does have. But did you hear from Michelle Bowman today? She says policy should de-emphasize inflation, and last week's cut was just the first step to bring the rates back down to neutral. Look, when Stephen Miran came out and said a series of 50-point cuts, I'm reading 4 because he wants to get the rate back to around 2%, that would create a nervousness, a panic in the stock market. But he's saying that's not the case.
Yeah.
The U.S. needs to compete globally. Lower rates help you to do that. You can bring borrowing costs down for businesses, for consumers, and you could unlock the housing market. I mean, we have an affordability, quote-unquote, crisis that needs to be addressed by Democrats and Republicans. If you can get rates down, if you can get people into homes, that all helps. I think this is what Stephen Miran is saying. But Jay Powell is saying the exact opposite. I'm going to be data dependent. I don't care if I'm too late. I'm going to just read the data and react slowly as needed.
Jackie, Lauren said something that has been a feature of this conversation again and again, the risk of the panic. If you make too big of a cut too soon, you could cause the market to panic. Or if you threaten the Fed's independence, you could cause the market to panic. The market has not panicked about any of that stuff. The market panicked about tariffs. It hasn't panicked about anything to do with the Fed since then. And so I sort of feel like, is the data of the market on Miran's side here?
I think it is. And actually, many were saying if we got a 50 basis point cut this last time around, the market would panic. I don't think so. They have a microphone and they broadcast to the market what they're thinking when they sit down and have these conversations, but also when they do press conferences, what they're thinking ahead. They give us a little insight into it. I think the market would say the Fed realized that it was wrong, and it's trying to do something to course correct. And I think this market would be just fine with that, as a matter of fact.
Lydia, you brought up Bowman's remarks in the first hour. So you and Lauren reading the same set of notes there. No, it's very good.
Like mine,
because it matters. And let me throw in why I think it matters. You had, in this last meeting, you had an 11-to-1 situation, basically. 11 of the voting members said we're on for a quarter point. Miran's the outlier. So everyone says there's great. The Fed seemed to rally around Jay Powell in this meeting. But you wonder if that's really the case. And with Bowman in her comments today, I would argue you've got a more divided Fed now than you've had in a very long time.
Absolutely, because another set of comments I was looking at were coming from Raphael Bostic, who also spoke today. He interviewed with the Wall Street Journal yesterday, and he's kind of on the other end of the spectrum, suggesting that he only wanted one rate cut for this year. He voted for the 25-point cut in the last meeting. That would suggest that maybe he's looking at the scenario and saying no more rate cuts for the rest of the year, perhaps. So it does seem like Jay Powell maybe is walking down the middle of the road. When you look at the full landscape of the voting members, he's not the most hawkish, he's not the most dovish. But, where he goes from here, you're very right to point out, Lauren, that this has some real implications for the housing market, not just with mortgage rates, but also with the supply constraint. Last week we had data on housing starts and building permits. They were surprises to the severe downside, suggesting that we're not anywhere close to literally building our way out of the housing shortage anytime soon. So some relief there, I think, would be appreciated by builders and people in the housing market as well.
If you just look at the American mind, Kevin, I would argue the biggest thing on their mind when it comes to the Fed and interest rates is housing. It feels like everything you want to work for in life is stymied by this market. Is that a big enough issue for the Fed to tilt the scale a little bit to lower rates, even if the inflation problem isn't totally licked?
Here's the problem. The Fed may not be able to fix mortgage rates. They're more priced on 5- and 10-year Treasury. And they didn't budge on the 25 basis point cut because there's other reasons. One of it's deficit. Others are looking at inflation and worried about the print on Friday. And the other problem, is, Lydia made reference to it, the input costs on copper and aluminum and nickel and softwood lumber are all in the 35% tariff right now. So if you talk to a builder, any of the big ones, they're saying, wait a second, can't get permits. The stuff we make houses with is inflated like hell right now until you work out what the real tariff's going to be with the countries that supply it. Canada's one of them, but there's others. And, you know, that's policy. And so, and the Fed says, great, we'll cut another 25 basis points. I don't think the 5-year budges. And so the idea of a 4% mortgage rate or, you know, 3.5%, it's never coming back, ever. So, and remember, America ran on 7% mortgages for 50 years.
Right.
Yeah.
So that's never coming back. And it doesn't matter how much the president jawbones it, the big bond vigilantes, that name's going to come back from the 70s and 80s. They're the ones pricing long-term debt, and they don't like what they see right now.
It's this affordability question, just to move this in the realm of politics a little bit. You know, this is what the left has, one thing they've learned is run on affordability. And they know housing is maybe of all those pieces, the one that's really going to stick with people right now. If the Fed is inert, Lauren, if them cutting rates isn't going to move mortgage rates down, I think that, I would say Republicans are in a little bit of a pickle here, because I do think that they wanted to deliver on lower housing costs, and I don't know that it's happening right now.
Well, maybe they can do some other things. Like, I remember about a decade ago when we were looking for a house, rates were not that high, but prices were.
Yep.
And my dad said, well, you know, when you were born and we bought our house, I paid the 13% interest rate, but houses weren't that expensive. Now, unfortunately, rates are high and homes are very expensive at record prices. So is there a way that the administration can work with the builders, work with the other countries that supply the materials that we need to help them lower the cost of the house? And then you don't have to worry about rates as much. I don't know, but I think something needs to be done, because yes, heading into a midterm election year, both sides are running on affordability. We've got cheaper gas prices, but we don't have people in homes.
You've been on that, Jackie. I mean, I know you're paying attention to the housing affordability issue, and it looks intractable. And I agree with you. Watching the 10-year, watching the 30-year in relation to the rate cut, it didn't move things a lot.
Giving people these low mortgages when interest rates were essentially at zero was an economic experiment. I still go back to that op-ed from Scott Bessent in the Wall Street Journal that says this all kind of started right after the financial crisis. You can't blame it on any one Fed chair per se, even though, you know, Powell hasn't been great. The other two, they did what they thought they had to do to be able to move the economy and America forward. But arguably, mistakes were made. Rates probably should have gone up or crept up a little bit sooner, because we stayed at this point. All these people have locked in these loans now. Part of the problem is none of them want to move, because if they move, they say, well, where am I going to go? And why would I take a higher mortgage rate? And prices are still high. So that's partially what's locking up the housing market, too, not just the cost of building new homes and putting more supply out there. This is a tricky one. And as the experiment plays out, we're going to see what ends up happening. I'm not necessarily sure anybody's got the crystal ball here.
And Bessent's main point was the Fed's done too much experimenting.
Yeah.
And that's part of why we're in this issue.
What did he call it? Gain of function.
Gain of function Fed. Enough of that. Hey, you're watching U.S. Steel. What's going on?
Oh, yeah, absolutely. Well, the White House has announced that it's blocked U.S. Steel's decision to stop processing raw steel at its Illinois plant. The White House saying, quote, the administration did intervene to block U.S. Steel's decision to idle the Granite City Works plant with the threat of the president invoking his golden share authority. This power, remember, was part of the Trump administration's approval of Nippon Steel's buyout of U.S. Steel, allowing the government to oversee key decisions affecting domestic steel production. The move aims to protect American steel manufacturing and national security interests. And I get all of that, but this is an example of when folks say the government shouldn't really be involved in decision-making in private business. It gets hairy. You know, we've talked about the stake in Intel. We've talked about how they're sort of in bed a little bit with NVIDIA as well. So here you've got the government making decisions.
That golden share term has come up a lot. You're one of the guys who is, I think, out there talking about it first. What do you think of this decision?
No one had even heard of the golden share until TikTok came to the block. So it's an 11-month-old phenomenon. It's one individual deciding the outcome and the fate of a multi-billion-dollar company. Same thing going on here with Trump. What this tells me, if this is going to be the policy, just my reaction, I'm going to invest in pig iron, which nobody has invested in America for a really long time. That's the input you need to run that plant. I'm going to find it. I'm going to invest in it. You just put me onto a new investment idea, because you can't do what Trump wants without pig iron. That's the next problem. All of these decisions, particularly around these industrial manufacturing facilities, they gave up on this 20 years ago. You can't just build a new steel plant. You got to get the inputs. You got to get, same with aluminum. It'll take 20 years to get back what we can't buy now because of tariffs. So a lot of this industrial policy, including this, I think there'll be a lot of negative reaction to this golden share thing. This ain't America. Like, there's no golden share in the S&P 500. If you had a golden share in an S&P 500 company, you'd go to jail if you didn't disclose it. That's a super preference share.
It could be an import from China that you definitely don't want here, the idea of the golden share.
Well,
Anytime everyone's interested in pig iron, they're
Do
looking
you
it up
like
right
that?
now.
Well, I like pig iron, but do you like golden share in this situation? I think a lot of people don't.
Yeah, it creates an immense amount of uncertainty when one person can call the shots. I agree with you on that.